Subcommittee on Housing and Insurance will come to order. Without objection, the chair is authorized to declare a recess of the committee at any time. This hearing is titled, Building Our Future, Increasing Housing Supply in America. Without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. I now recognize myself for 4 minutes for an opening statement. I'm pleased to call to order the first Housing and Insurance Subcommittee hearing of the 119th Congress. Before discussing the subject of this hearing, I'd like to welcome my friends on both sides of the aisle to this important subcommittee. The jurisdiction of the Housing and Insurance Committee touches every single congressional district, and I look forward to working with each of you on the issues that affect your constituents. I'm a straight shooter. I don't hide the ball, and I will do my best to be fair to everyone on this subcommittee, regardless of political affiliation. With that, let me pivot to an introduction of today's hearing. The issue we're exploring today is one that touches the lives of every single American, both in the towering cities on the coast and in rural communities in the middle of the country, and that is the cost of housing. According to the National Association of Realtors, the median annual existing home price in 2024 was up 69% relative to 1995, and that's adjusted for inflation. This housing affordability challenge affects everyone. Young people saving up to buy their first home are renting for longer. Middle-class workers are struggling to make the rent, and Americans today feel less secure about their financial future because their bills are going up. When it comes to housing affordability, I hope this hearing will help contextualize this problem and give members of our subcommittee an opportunity to explore root causes. Let's start with a few things we can rule out. The problem is not that people aren't making enough money. Wages are up over the last several years. The problem is not that people aren't saving enough money. Savings exploded during the COVID-19 pandemic and have only recently trended back downwards. It's also not that the government doesn't spend enough money on federal programs. We are coming off a period with historic levels of government spending. The reason for high housing costs is simple. We are not building enough homes in this country to meet the demand. Some estimates put the gap between housing supply and demand at around 3.85 million units nationwide. Some put it even higher at more than 5 million units. The root of that housing supply problem is a little trickier to pin down to just one cause. Regulatory barriers at the state and local level, like zoning and land use policies, play a large role in making it more difficult to create more housing in places that need it. Another driver is the actual cost of materials and the cost of labor used to build a home. For projects that use federal dollars, either through low-income housing tax credit or funds from a federal program like the Home Investment Partnership, those dollars aren't free. They come with regulatory requirements at the federal level that can make it more challenging to actually give taxpayers the best bang for their buck. And finally, we can explore whether there are any challenges related to the financing side that keeps projects from getting off the ground. I am excited to dig deeper into each of these issues today, and I look forward to our witnesses' testimony. With that, I yield back. The chair now recognizes the ranking member of the subcommittee, Mr. Cleaver, for 4 minutes for an opening statement.
Thank you, Mr. Chairman, and I look forward to working with you. I am absolutely elated over the fact that we have issues that we both would like to resolve in these key positions. So thank you very much for your receptivity. This is the first hearing of the Subcommittee on Housing and Insurance in the 119th Congress. Our nation is struggling with a fair housing and affordable housing crisis. In 2023, Americans filed a record-breaking number of fair housing complaints. At the same time, the cost of renting and purchasing a home has reached historic heights. Since 2019, rents in the United States have increased 46.8%. The average sales price of a home now exceeds $500,000. When a typical family sits at the table to pencil out how they will get by for the next month in Missouri or in Nebraska or anywhere else for that matter, housing is the single largest expense. And I appreciate your willingness, Mr. Chairman, to engage with me on what are clearly common sense solutions. It is my hope that we pass bipartisan legislation into law that will improve the quality of life for American families. I support the Identifying Regulatory Barriers to Housing Supply Act under consideration today. Local jurisdictions are rightfully asking the federal government for funding and resources tackling this housing crisis. It is responsible, I think, to ask them to assess how local land use policies are limiting the impact of the federal funding and driving up the very cost they're trying to reduce. Some jurisdictions have made developing more housing illegal or cost prohibitive. Others are doing an incredible job figuring out how to optimize their zoning laws and are welcoming innovation in design, technology, and construction. I also support the Housing Supply and Innovation Framework Act under consideration, which would require HUD to study, develop, and publish guidelines and best practices for local zoning. These are constructive pieces of legislation. Zoning reforms are absolutely necessary, but not sufficient by themselves. Senator Elizabeth Warren, Senator Raphael Warnock, and I have introduced the American Housing and Economic Mobility Act. This legislation would generate 3 million new housing units and bring down rents. This is also a constructive approach. It goes without saying that reported efforts to decimate HUD funding, programs, or staff is not constructive. It would also not be constructive for Congress to pass housing legislation that HUD does not have the capacity or the resources to implement. Yesterday, I joined Ranking Member Waters and others at HUD to elevate current concerns about executive actions. This demonstration followed reports that the department terminated hundreds of probationary employees, reportedly plans to slash the department's workforce by 1/2, and has already withheld funding serving families, seniors, and people with disabilities. The Congressional Public Housing Caucus has also sent a letter to Secretary Turner on how cuts would exacerbate the housing crisis and increase waste, fraud, and abuse. We have requested an urgent meeting with the Secretary. Secretary Turner testified to Congress that he would run a transparent and accountable department. Thank you again, Mr. Chairman. I look forward to this hearing today and looking forward to working with you. I yield back.
Thank you, Mr. Cleaver. The chair now recognizes the chairman of the full committee, Mr. Hill, for 1 minute.
I want to thank my friend from Nebraska, Chairman Flood, for assuming the gavel on this important subcommittee, our Housing and Insurance Subcommittee. Mr. Flood has been long interested, as you can tell in his opening statement, in rolling up his sleeves and doing the hard work first to understand the challenges before reaching out in a bipartisan way and looking for solutions. This hearing is a great example of that approach. The typical family median cost of an FHA-insured home in my home state of Arkansas is $175,000. In 2020, the 30-year mortgage rate was 3.1%. With a 10% down payment, that family could be in that house for $680 a month. Now, after Biden's inflation, the mortgage rate is 6.8%, and that monthly payment's now over $1,000. Plus, in Arkansas, the average homeowner's insurance rates are $3,300 in 2023. Now they're up 9% to $3,600. So housing affordability is important, not only in Arkansas and Missouri and Nebraska, but across the country. I look forward to working with my colleagues, and I yield back to the chair.
Chairman yields back. Today, we welcome the testimony of the Honorable Paul Compton, a managing partner at Compton Jones Drescher, LLC. We welcome Dr. Emily Hamilton, who is a senior research fellow and director of the Urbanity Project at the Mercadia Center at George Mason University. We welcome Mr. Buddy Hughes, who is the chairman of the board with the National Association of Homebuilders. We welcome Ms. Tara Vasicek, who is the city administrator for the city of Columbus, Nebraska. And we welcome Ms. Nikitra Bailey, the executive vice president with the National Fair Housing Alliance. We want to thank each of you for taking the time to be here. Each of you will be recognized for 5 minutes to give an oral presentation of your testimony. Without objection, your written statements will be made part of the record. I would add that when the ranking member of the full Financial Services Committee, Ms. Waters arrives, we will take a short break and ask her to make remarks for 1 minute. Mr. Compton, you are now recognized for 5 minutes for your oral remarks.
Thank you, Chairman Flood, Ranking Member Cleaver, Chairman Hill, members of the subcommittee. Thank you for this opportunity to testify and share my perspectives on increasing the housing supply. I have practiced law at the intersection of real estate, banking, tax, and affordable housing for more than 30 years. After my Senate confirmation in a bipartisan vote in 2017, I served as General Counsel of HUD under Secretary Ben Carson. Since that time, I've returned to private practice focusing on affordable housing. In July 2024, I had the privilege of testifying before this subcommittee concerning cutting through government red tape in order to increase the supply and affordability of housing. I appreciate this opportunity to follow up on that. In that testimony, I expressed my view that overregulation, particularly at the state and local levels, has driven up housing prices. The biggest part of the solution, in my view, lies in restoring checks and balances at those same levels to curb the continuous growth in housing regulation over the past 40 years. Numerous studies establish several facts. The real cost of housing construction has not meaningfully increased over the past 40 years when adjusted for inflation. The real cost of housing has substantially outstripped inflation over that period, and the core components of that excess cost are land costs driven by land use regulation, the direct cost of regulation, and the indirect cost of regulation raising risk of creating homes. From community to community, and indeed from federal agency to federal agency, there's great variation in the nature of regulation. How Massachusetts is regulating housing is different from California, which is certainly different from Texas. Moreover, how HUD regulates housing is different from how USDA regulates housing. One result of this is the housing market, particularly for single-family and smaller multifamily developments, is incredibly localized in nature. Thus, I believe that the first conclusion for this committee is that there is not one or even two or three problems, but there are many, many. I believe that we must first view this systematically. That is, how can our overall governing structures be adjusted so that there's not a continuing bias to more regulation? Second, we must look aggressively for each opportunity to pare back regulations. In the federal context, I can give one example of this. Under HUD's National Environmental Policy Act regulations, nearly every program, from FHA loans to CDGB to home program grants, requires a governmental environmental review and notification process for the public. There are thousands, if not tens of thousands of these each year. Yet over the last 6 years, as this process has delayed countless projects by many months and cost millions of dollars, it has resulted in a grand total of 4 environmental impact statements. We simply are regulating in a way that is excessive in light of the benefits that it's producing. And in many cases, as I noted, it's not just merely the cost of the red tape and regulation, but it is the increase in risk. There are several other elements that I would like to specifically call out. As I noted, first of all, it is eliminating most or perhaps all HUD programs from the coverage of NEPA. Under the revised definition contained in the Fiscal Responsibility Act of 2023, they simply do not meet the definition of a major federal action. This does not mean that any of the substantive environmental requirements change, but only that the bureaucratic process of notice and review does. Second, make federal property available for housing. This is more difficult than it sounds, but there is one clear and easy way to do it, and that is through the authority of the Department of Defense to enter into enhanced use leases, which provide ground leases that could then be combined with FHA financing to create housing in these locations. We looked under Secretary Carson many times at using federal land for housing, and it's incredibly challenging to do that. But the military, through its enhanced use lease program, can easily do that if we can just get HUD and DOD on the same page. Next, I would reconsider the scope of limitations caused by habitat restrictions, in particular the northern long-eared bat. This covers almost the entire eastern United States and causes many, many delays in projects. Mr. Chairman, thank you. I'll be delighted to answer questions on this and other topics.
Thank you, Mr. Compton. Dr. Hamilton, you are now recognized for 5 minutes for your oral remarks.
Thank you, Chair Flood, Ranking Member Cleaver, and members of the subcommittee. I'm Emily Hamilton, a senior research fellow at the Mercatus Center at George Mason University. Outdated land use and building regulations that restrict housing supply and drive up costs are a key driver of the affordability problems we're discussing today. While state and local governments play the primary role in shaping these policies, federal action matters too. In some cases, federal policies directly limit housing supply, and in others, Congress can provide leadership by supporting state and local reformers working to modernize outdated rules. Today, I'll highlight 3 areas where Congress can help state and local policymakers learn from what's working and repeal its own rules that are standing in the way of housing construction. First, reforming land use regulations. Second, expanding opportunities for siting manufactured housing. And third, introducing improved analysis into the building code development process. To the first area, reforming land use regulations. Rules that require each housing unit to use a lot of land place a high floor on the cost of building, but we have many examples of reforms that facilitate improved affordability. For example, Houston reduced the amount of land required for each new single-family house by 2/3. As a result of this policy change, 80,000 houses have been built on small lots, and Houston is the most affordable large Sunbelt metro. Congress could facilitate knowledge sharing by directing HUD to publish model policies for facilitating new, less expensive housing construction based on proven land use reforms like this. It could also lead by example by repealing the Height of Buildings Act for DC, which squeezes apartments out of the city's central business district. To the second area, expanding opportunities for siting manufactured housing. Manufactured housing is the least expensive way to build a new home in the U.S. today. However, many localities are choosing not to zone land for new manufactured housing. Congress members could sing the praises of policymakers in states including Maryland, Montana, and Nebraska who have passed laws requiring their localities to allow manufactured housing to be used on any lot where site-built housing would be allowed, as well as policymakers in states like Arkansas and Texas who have banned aesthetic requirements that may make manufactured housing impractical. Federal statute currently requires every manufactured house to sit on a permanent steel chassis, even if the house is going to be attached to a foundation, never to be moved after its delivery from the factory. Congressional reform could improve the affordability of manufactured housing by removing this permanent steel chassis requirement, reducing costs, and opening up opportunities for more flexible use of manufactured units. And finally, introducing economic analysis into the building code development process. While HUD's code for manufactured housing provides the most economical way to build new housing today, most new housing is built according to a state or local building code. In the US, these codes are based on model codes published by the International Code Council. A 2022 survey found that just those building code regulations adopted in the past 10 years make up 11% of the cost of building new apartment buildings. Americans deserve building codes that achieve high safety standards while remaining cost-effective, but the model codes that provide the foundation of U.S. building codes are not based on rigorous analysis. HUD could help by creating model codes for areas where state and local policymakers are expressing interest in reform, including a code for single-stair multifamily buildings up to 6 stories, and a version of the International Residential Code that could cover up to 6 units. To conclude, the heavy lifting in zoning and building code reform must come from state and local policymakers, but Congress can aid these efforts by shining a light on successful policies and repealing its own rules that are standing in the way of more housing at better prices. Thank you.
Thank you, Dr. Hamilton. Mr. Hughes, you are now recognized for 5 minutes for your oral remarks.
Thank you, Chairman Flood, Ranking Member Cleaver, Chairman Hill, and members of the subcommittee. Thank you for the opportunity to testify today on behalf of NAHB. The United States is facing a fever-pitched housing affordability crisis. Nearly 77% of U.S. households cannot afford just the median price of a new single-family home. Even small price increases have sharp effects. Every time $1,000 gets added to the cost of a home, a new home, an additional 106,000 households are priced out of the market. What's fueling this unaffordability are rising construction costs, which make it increasingly difficult for builders to produce housing that is attainable for buyers and renters, and lack of supply of over 1.5 million housing units. The headwinds placing pressure on builders can be boiled down to 5 categories that we call the 5 L's: lending, lots, labor, lumber, and laws. Last year, NAHB released a 10-point plan to tame shelter inflation and ease the housing affordability crisis. We must work together to tackle these issues to ensure that all Americans have access to affordable housing. On lending, a lack of capital, particularly for small builders, is a key constraint on supply. The AD&C loan is one of the most heavily used financing tools in a builder's credit toolbox. Unfortunately, AD&C credit is tightening. Home builders rely on community banks for these loan products, but fewer banks mean fewer opportunities for a competitive interest rate. In addition to AD&C, builders utilize and rely on several federal programs to help them supply new homes and apartments. These programs should be preserved and strengthened through practical regulatory processes. The availability of building lots is a major issue limiting housing production. Many metro areas face a shortage of developed land. Zoning laws and land use restrictions make it difficult to convert undeveloped land into housing. Passing the chairman's Identifying Regulatory Barriers to Housing Supply Act will help policymakers identify housing barriers that prevent the production of more supply. Our nation's skilled labor force cannot meet our housing needs. Month to month, there are over 300,000 open positions. We must support programs like Job Corps and legislation like the Constructs Act to help prepare young adults for rewarding careers in construction and other essential trades. The cost and availability of materials, particularly lumber, significantly affect housing production. While lumber prices have fluctuated, supply chain instability and tariffs on imported materials continue to create uncertainty for builders. Boosting our domestic supply of lumber and negotiating a long-term softwood lumber agreement with Canada can help stabilize this volatile market, giving builders greater price stability. We respect regulation aimed at health, safety, and welfare. However, the HUD USDA minimum energy standards using the 2021 IECC offers minimal cost savings to homeowners. Instead, this mandate significantly increases housing cost, especially in the entry-level market, thereby limiting access to mortgage financing and disadvantaging buyers. HUD and USDA should assist vulnerable home buyers and renters, not price them out of the market. This policy will deter new construction at a time when increasing the housing supply is crucial to lowering shelter inflation cost. Thank you again for this opportunity. The 5 L's, lending, lots, labor, lumber, and laws are significant headwinds facing the residential construction industry, but if we partner together to address each factor, then we'll be able to create the housing supply that all Americans need. Thank you again.
Thank you, Mr. Hughes. Ms. Tara Vasicek, you are now recognized for 5 minutes for your oral remarks.
Good afternoon, Chairman Flood, Ranking Member Cleaver, and subcommittee members. Thank you for the opportunity to testify today and provide a local perspective on the nationwide housing crisis. I am the City Administrator for the City of Columbus, Nebraska. Columbus had made significant efforts to increase housing production. recognizing a lack of available housing directly impacts our economic growth, workforce attraction and retention, as well as quality of life. Through strategic initiatives, we have increased housing development significantly. However, despite our proactive approach and continued commitment to housing, the issue remains: housing production is not meeting demand. A few of the actions we've taken locally include removing locally controlled regulatory barriers, direct investment in housing development, and utilizing and leveraging all of the beneficial tools and incentives available to us. Over the past 5 years, Columbus has undertaken multiple updates to our land development regulations to remove barriers to housing production. Many cities have regulations that limit housing density. Columbus does not. Accessory dwelling units, mixed-use types are allowed by right in all zones. We have changed our codes to make infill development and adaptive reuse easy to complete. Our local permitting process is efficient. All housing permits are issued within 2 weeks of the city receiving a completed application. Currently, the city is leading a workforce housing development subdivision. There are currently 325 housing units of various densities being constructed, 6 times the units produced annually a short time ago. The other major financial tool used for this project, tax increment financing, or TIF, similar to tax abatement in other states, TIF allows for the capture of up to 15 years of property taxes paid on the project's improvements to use as funding to build out the project. TIF is the most efficient tool available to Nebraska communities for housing development. In addition to TIF, the city allows or allocates a portion of local sales tax to economic development. Primarily, this funding goes to housing. We have also been successful in securing many grants. We currently have a significant revolving loan fund, which acts as short-term gap financing for workforce housing projects. Columbus is very strategic when deciding what state and federal grants we pursue. Many grants introduce excessive regulatory hurdles, leading to time delays, increased project cost, and long-term management challenges. These factors also negatively impact construction because they often limit the number of builders who are willing to participate. In a housing market as dire as the current, builders are going to pick the path of least resistance. Despite our efforts to increase housing production, significant obstacles remain which continue to impede development. Locally, rising land and infrastructure costs are a significant challenge. At the state and federal levels, complex regulations add additional time and expense. The federal regulation that we hear the most negativity about related to cost is the EPA's stormwater management policies, adds hundreds of thousands of dollars to subdivisions. CDBG is a federal program the City of Columbus would like to utilize more for housing, but the beneficiary requirements often prevent us from seeking this funding. In order to provide housing affordable to individuals earning 50 to 80% AMI, substantial incentives in addition to CDBG have to be provided. The most affordable housing in any city will always be its existing housing stock, not new construction. Affordable new housing units can only be built because of substantial incentives and subsidies. Supporting workforce housing with CDBG could be very successful. By expanding market rate housing in growing cities like Columbus, you will also free up more attainable and affordable housing options, which CDBG aims to support. Finally, I would ask you to consider providing more funding opportunities for communities like Columbus who have reformed local regulations and are being proactive. By prioritizing funding for communities which have embraced reform, you can accelerate housing production and ensure local initiatives are met with the necessary resources to succeed. I strongly believe today housing is one of the greatest limiting factors to continued economic prosperity for our nation. Please join Columbus and so many other cities in thinking more critically about how we can all solve this vitally important issue. Thank you for your time, attention, and this opportunity.
Thank you very much. Ms. Bailey, you are now recognized for 5 minutes for your oral remarks. While we work on your microphone, we're going to recognize the ranking member of the Full Financial Services Committee for her opening remarks of 1 minute, and we will work with Ms. Bailey's microphone to get it fixed.
Thank you very much. Well, committee Republicans claim to care about increasing housing supply, Yet the Trump administration's policies only make housing more expensive. Today, Trump imposed taxes on imports from Canada and Mexico that will increase housing costs, has gutted enforcement of consumer protections and civil rights in housing. And House Republicans are doing nothing as the Doge ketamine clan infiltrates the nation's key housing agency. So far, Musk has stolen funding from communities illegally, terminated staff, and accessed confidential data, including details about sexual assaults against women. All of this paves the way toward their end goal: evict America to put America's housing in the hands of private equity investors. I urge Republicans to man up and hold Trump and co-president Musk accountable and immediately call Secretary Turner up to testify. With that, I ask unanimous consent to submit 4 statements into the record from the following organizations: the National Low Income Housing Coalition, the National Association of Housing and Redevelopment Officials, the NAACP, Legal Defense Fund, and National Association of Realtors. I also request unanimous consent to submit 2 letters from the Department of Housing and Urban Development. The first is a notice to a grantee that their fair housing grant has been canceled at the direction of Elon Musk, Doge,
Without objection.
stating that the civil rights funding, quote, no longer affects the program goals or agency priorities. There's more, but I'm going to yield back my time because I just want to say, Republicans, if you want to do housing, you got to get rid of Elon Musk.
Your time has expired. Without objection. Ms. Bailey, is your microphone working?
Come use mine.
Ms. Bailey, why don't you and Ms. Vasicek switch seats for just a moment? Yeah, there we go. Ms. Bailey, you're recognized for your opening statement, your oral statement of 5 minutes.
Thank you. Chair Flood, Ranking Member Cleaver, Chair Hill, Ranking Member Waters, and other distinguished members of the subcommittee, thank you for the opportunity to testify during today's hearing on the need to increase the nation's supply of fair and affordable housing for everyday people, including the frontline workers such as teachers, nurses, firefighters, police officers, and others who sacrificed their lives during the COVID-19 crisis to help our economy remain afloat. I am Nikitra Bailey, Executive Vice President of the National Fair Housing Alliance. NAFA leads the fair housing movement, and we work to eliminate housing discrimination and ensure equitable housing opportunities for all people and communities. NAFA also ensures and represents the voices of over 200 local nonprofit fair housing agencies throughout the United States. Our nation is in a fair and affordable housing crisis impacting millions, and the actions of President Trump's executive orders attempting to ban diversity, equity, inclusion, and accessibility punitively and haphazardly, throwing together a federal funding freeze and canceling almost half of funding for local nonprofit fair housing agencies throughout the United States have caused chaos, fear, insecurity, and dysfunction around the country. Instead of providing our nation with practical solutions to address skyrocketing housing costs, a lack of affordable housing supply, increased complaints of housing discrimination, and technology's growing role in determining housing decisions with solutions, steps on the ladders of opportunity are being removed for everyday people. These haphazard executive actions will cause serious economic and personal injuries that will undermine our already fragile housing market and our nation. Housing is fundamental to the American dream, and people want elected leaders to quickly implement solutions so that they can ensure they can fairly access opportunity and share in our nation's prosperity. People are seeking opportunities and solutions that will drive down the rising cost of housing and provide fair market rents, expand fair access to mortgage credit in underserved communities, reduce homeowners' insurance costs, and produce the development of over 5 million affordable housing units. Diversity, equity, inclusion, inclusion, and accessibility are synonymous with hard work, fairness, merit, and standards of excellence. They are a cornerstone of our nation's Constitution and civil rights laws and help to ensure compliance with our nation's robust anti-discrimination laws. In fact, many of these concepts are codified in our civil rights laws and regulations as well as the Constitution. Congress established fair housing as a national policy of the United States with the passage of the Fair Housing Act following the horrific assassination of Dr. Martin Luther King Jr. The landmark legislation provides two promises: the right for all people to access housing free of discrimination and the creation and inclusion of inclusive, vibrant communities with life-affirming amenities everyone needs to thrive. The president cannot upend our country's national policy, the Constitution, or civil rights laws with executive orders. Congress must act quickly to make equitable housing investments that promote financial inclusion and stimulate economic growth for everyone. As housing continues to drive inflation, the Federal Reserve Board is powerless to handle housing inflation. A housing market in which all people cannot participate fairly without regard to race, color, national origin, religion, gender, familial status, or disability is a broken market, both economically and morally. The Housing Crisis Response Act, sponsored by Ranking Member Waters, provides a sensible path forward. It includes $150 billion in relief for the nation's fair and affordable housing crisis to ensure people living in urban, rural, and suburban communities' housing needs are met. Increased support and intervention from our federal government is needed, not a withdrawal from basic civil rights. Fair housing laws improve people's lives in the communities in which they live, especially seniors needing to remain housed, women who have been battered and are seeking safety from abusers, and people with disability who use fair housing laws to obtain accessible housing so they can properly use their kitchens and bathrooms. They also strengthen our economy and make the nation more prosperous. America is at its best when united and relentlessly pursuing a country where everyone, and we mean everyone, regardless of their background, has a fair shot at reaching their American dream. Thank you for the opportunity. I look forward to answering questions.
Thank you, Ms. Bailey. We'll now turn to member questions. The chair now recognizes himself for 5 minutes for questioning. First of all, I want to say to Ms. Vasicek, thank you for your testimony today, and thank you for telling the story of the workforce housing challenges in Columbus, Nebraska. Let me tell you about this community. 24,000 people live there. It has a huge manufacturing base that pulls from well over 50,000 in the region. Last February, this time last year, they had 1,200 open jobs, unemployment's at 1%, and the number one limiting factor to filling those jobs was a lack of housing. A lack of housing. If you are a mother and a father and you're both working at a meatpacking plant in Cargill and you're working 50 hours a week, you deserve a home. You deserve a home that you can own in a neighborhood where your kids can walk to school and you can take them to the park. And we have all of those amenities, but we don't have the houses. And so it's not just a housing issue, it's an economic development issue. Ms. Vasicek, do you have any examples you can share of how a lack of housing stock prevented private investment into the community, whether it be from a company locating operations in Columbus or expanding operations there?
I hear about, at every economic development related visit, meeting, I hear about this, whether it's a current business or a business that we're trying to attract to Columbus. The number one topic is housing, followed quickly by workforce, and they go hand in hand, in our opinion. We can't attract more workforce if they have nowhere to live. I've heard of countless stories of businesses hiring people on, and then they end up turning the job down because they can't find housing in Columbus.
So one of the things I really want to unpack here is that Columbus took its own sales tax money that it gets from through the state of Nebraska, its local share, its local option, and you actually went out, bought land, put the infrastructure into the ground, and made those lots available to reduce the risk homebuilders would have so that they could deliver a better priced home to somebody in Columbus. Is that right?
That's correct.
So here's an example of a city government in a rural area using existing sales tax revenue, Imagine if we did this for cities like it across the country, where the builder could come in, the infrastructure's in the ground, the benefit of that government funding ultimately accrues to the new homeowner, building equity and helping them get started. And the other thing that I think is very important here is that we should be building these homes in the middle of the town where there are parks and schools, because kids learn better in great neighborhoods. All right, let's go to Dr. Hamilton. You focused your testimony on zoning and land use policies at the local level. What should the federal government do in these areas while respecting the authority of localities to make their own specific policies?
Thank you, Chair Flood. That's an important question. While some have proposed more radical interventions, I think this area needs to stay squarely in the hands of state and local government officials. But as we're hearing from constituents in so many parts of the country, this is a huge problem for American families. And there's bipartisan agreement that these rules need to get reformed. So I think there's an important knowledge sharing role and use of the bully pulpit available to members of Congress to point to proven examples of reforms that are making meaningful differences in housing supply and affordability.
Ms. Vasichek, you talked a little bit about the environmental requirements affecting a small community like Columbus. What's the real barrier there? Like, what kind of barriers have you seen with these environmental regulations?
The regulations I spoke of are specifically related to stormwater. We have, in the last 10 years, been required to, any project that is over an acre, disturbs more than an acre of site area, has to go through very stringent stormwater management regulations and permanent infrastructure improvements. So that engineering cost, that understanding those regulations, and then building out those improvements is considerable cost to developers.
I don't have much time here, but one last question. Rehab funding for existing housing stock, how can it be used, and what would is it something you care about?
Oh yes, it's something we care about a lot. We use our local option sales tax for that too. We could use considerably more for owner-occupied rehab. Our local option sales tax has...
Regrettably, I have to stop you there. I'm out of time, so I have to enforce it on myself. But thank you very much for being here. The gentleman from Missouri, Mr. Cleaver, the ranking member, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Ms. Bailey, but I want to go to you, Ms. Vasichek. Your testimony was extremely significant to me because you talked about workforce housing, and you used tax increment, and that is using tax increment financing. What I was a mayor before I took this demotion, but I'm curious about what was done in this community, because when you use tax increment financing, when many cities, it ends up being that you draw the TIF district, and most communities are going to try to draw at least a portion of their district, all of it if possible, into some of the older parts of the city. Inevitably, if you go down into downtown Kansas City, you're going to see all kinds of new buildings going up in Kansas City, and they're receiving TIF. But if you go into the older parts of the neighborhood, even though those areas have been been designed as TIF districts, not one single project. And I've been around the country and I've seen similar things. I'm just so interested in what Columbus did to attract housing TIFs.
Specifically for the project that I referenced in my testimony, the City of Columbus, we work very hard to make connections with housing builders, and then we made lots of connections, we built relationships, and then we had individual meetings and we put together a request for proposals. And in that request, we targeted the types of housing that we need in Columbus, and then we put that request for proposals out and we sent it to almost 70 housing builders in our region. and we received 10 maybe really good submittals for our subdivision, and we selected 5 of those to build in our subdivision, and that is who is building out this 25-acre project. Like Congressman or Representative Flood said, we are very active in being involved with our community because our business community is absolutely requiring that of us. That's why we're more active than we ever have been.
Thank you. I wouldn't mind taking a view of what's been done. I think that's, if there's a magical way of getting interest, I'm certainly interested in it. Thank you very much. Ms. Bailey, you mentioned in your testimony the administration's canceled, I think almost half of the signed grants already. Is there anything you can tell us that would suggest that this can be recovered, even if even if that's reversed today or next week? Have we lost ground that may not be recoverable or may be years to recover?
Yes, sir, and thank you so much for the question. Many of the local fair housing organizations and communities throughout the nation, some of them rely on their HUD funding through the Fair Housing Initiatives Program, which is a program that was started under the Reagan administration to provide fair housing support in their communities. And because some of these agencies rely 100% on the funding, some of those agencies will cease to operate. Some of them are already taking actions to lay off staff and wound down. Some organizations that have not even received cancellation letters are also taking action now to wound down because they are afraid that they will get an abrupt notification. This came in the cover of dark without any notice, so no one could prepare. And in fact, it's an attack on a program that is one of HUD's most efficient programs, a program that has helped HUD efficiently address redlining, efficiently create solutions for appraisal bias, efficiently help survivors of domestic violence find safe and fair housing. So this will have harmful implications for people throughout the United States.
Thank you very much. I have lots of questions, but my time is running out, Mr. Chairman. I yield back.
Thank you, Mr. Cleaver. The gentleman from Arkansas, Mr. Hill, the chair of the full committee, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Thank you for our good panel for this important discussion about housing affordability, certainly a major topic for the suppliers of housing and the buyers of housing across our country. Mr. Hughes, I spent a good part of my life lending money to home builders before I was in Congress, and I've had good days and bad days in that business, and I've finished some houses as a banker that I didn't think I should have. But you talked a lot about the credit environment, and of course we talked about price here extensively and we think about that from a buyer's point of view. You know, the mortgage market and the mortgage price that shot up so highly during the days of the Joe Biden inflation. But I'm curious about talking about the supply side. And you mentioned specifically in your testimony about ADC lending, acquisition, development, and construction lending, something, as I say, I spent a lot of years in the middle of. What's happened? What's the biggest difference when you look back over your career? Are the lines of credit available to the members of the National Association of Home Builders, there are fewer specs, more customs only? Are the terms and conditions tougher? Talk to me about the price and structure and terms for a home builder right now in the banking market.
Well, yes to all of those. And we've all had those good days and bad days. Particularly what has been difficult for me is the fact I'm a very small operator. And it's made it difficult to get lending locally at community banks, savings and loans. I've had some success with federal credit unions simply when I was turned down by the other banks in my area. So having more options,
So more choice for you is important, like in your own community. If you had more competition, more bank choices, that would be a benefit to you. Is that what you're saying?
absolutely, because our competition housing are the national builders that have moved in to our county. We all know we're publicly traded.
Yeah.
they don't have to go into the banks and
No.
beg.
Well, when I started my banking company in the late 90s, there were 295 banks in Arkansas. Now there's 70 banks in Arkansas. So I know a lot of our communities are hurt by that, and that's why this committee's made a commitment that we want to make community banking, community financial institutions great again in this Congress by tailoring the regulatory burden so that these institutions are growing, that we actually have startup institutions, that the institutions that we have can access capital so that you can access capital. Has the structure of those loans also changed to where, you know, a builder, based on their financial statement and their track record, like the number of loans, individual homes you can start under a line of credit, has that shrunk over the years as well?
I'm not as familiar with that because I haven't done a lot of spec building. Most
Okay.
of the time it's been custom building.
Yep.
I've done some multifamily, but one thing that has bitten me in trying to do a rental project,
Yep.
that all of the banks in our city were, and this was after the recession when federal regulators were clamping down on banks for having over their allowed percentage of rental property. And I was turned down, like all of these banks, because it was rental. And they were over there, didn't have anything to do with
That's
our
right.
project.
I mean, this is what I think is so important for this committee to understand, that the impact of Dodd-Frank on community banking changed dramatically the risks that banks can take in very traditional, local, commercial businesses like building a home, and that if it's a rental property, it's got supposedly higher risk than something that's owner-occupied in a custom home that you're going to build. Mr. Chairman, I'd like to enter in the record the Council of Economic Advisors report from January of 2024 that talks about the burdens to housing affordability, and one of those is the pernicious impact of bank regulation since Dodd-Frank.
Without objection.
Mr. Chairman, I yield back.
Gentleman yields back. The gentlewoman from California, Ranking Member Waters, is now recognized for 5 minutes.
Thank you very much. Let's see, Mr. Hughes. President Trump has imposed a new 25% tax on goods purchased by Americans and American businesses from Canada and Mexico, which is being characterized as, quote, the world's dumbest trade war, unquote. Your organization sent a letter to Trump noting that Canada and Mexico supply the United States with 25% of building materials, and that his proposed tariffs would increase the cost of housing. Will your members be able to build more housing than they were yesterday with the added costs that come with paying these new import taxes?
No, absolutely not. And we're very concerned about tariffs because we import goods from Canada and Mexico and all over the globe for that matter. I deal particularly in Canada with one product, and I've had to spend a lot of money ahead of time to keep from paying that tariff. So we are very, very concerned.
Well, let me just say that we're sitting here talking about regulations or the cause of a lack of housing in this country. That's absolutely ridiculous. As a matter of fact, we have a housing crisis, and we're here acting business as usual. We have 700,000 people sleeping on the street every night who are homeless. We have people with Section 8 vouchers waiting for years to try to get a place. We have middle-class people who can't afford to pay 20% down on housing, and people paying more than 30% for housing. And yet, we have an administration that's sitting here talking about make building housing less safe. Let's do something about regulations that get in the way of big bankers making more money, et cetera, et cetera. This is all ridiculous. This doesn't make good sense. We have people, both in rural communities and urban communities, suffering. And so, it is not regulation. You know who wants to get rid of regulations? The biggest banks and financial institutions in this country. They want to get us back to where we were before we had that meltdown in predatory lending. Well, we're going to fight against predatory lending. We're going to fight to build more affordable housing. We're going to fight against this administration who claims to care about housing, but here doing the business of the billionaires. It's not going to work. and I am absolutely sick and tired of it. How much time do I have left? I have a lot more time. I'm going to continue to talk. Let me just tell you, I want us to understand there is a crisis in this country. Unfortunately, Trump, who has been bought and paid for by Elon Musk, has given him the ability to go into our areas, all of our departments, the Treasury, the Consumer Financial Protection Bureau, the Department of Education. And do you know, they just closed Social Security offices in my district and many of the other districts. Now, I add all of this to the housing crisis. And I want to tell you that this country is not going to do any better by getting rid of regulations and talking about environmental requirements and being opposed to things that have kept our homes and our communities safe as we build housing. Well, I want everybody to, as we say here, I don't kind of like the word, man up. It's time to face the crisis for what it is. Regulations that will be obliterated have nothing to do with us doing what we continue to try and do in HUD. I went over to HUD just yesterday with a letter to the new secretary to ask them, what are they going to do? Why are they allowing Musk to get rid of over 50% of the employees there? They won't be able to respond to the developers who want to build housing. We need to understand not only is there a housing crisis, but the cost of supply and materials have continued to rise since COVID. I want everybody to understand the government has a role to play if we care about America, if we care about safe homes, if we care about children who are sleeping in cars, who have to get up in the morning and try to go to school. We'll stop this madness talking about the regulations. Let's talk about what America can do rather than the president going over, having a good time with Putin and Kim Jong-un and with other countries that have nothing to do but want to take over our country. I have 19 more seconds. I'll keep going. And I'll keep going to say, for those of you who are in housing, who are responsible for building and getting money, you should be asking for more resources in order to get that done. With that said, I don't really have enough to say right now, but I'll keep saying it, and I want you to listen. Don't leave away from here business as usual. I want you to understand a fight is on. We're going to the streets.
Time has expired.
Oh, has it expired? I guess
It has expired. The gentleman from Tennessee, Mr. Rose, is now recognized for 5 minutes.
Thank you, Chairman Flood, and thank you, Ranking Member Cleaver, for holding this hearing, and thank you to our witnesses for your time and being here today with us. In Tennessee, we are blessed to be leaders in the manufactured housing space. I truly believe that manufactured housing serves as the key to unlocking more housing units for working families all across this nation. It is for that reason that I plan to reintroduce legislation in this Congress that would remove the current permanent steel chassis requirement for manufactured housing. Dr. Hamilton, what benefits would manufactured housing without a permanent chassis provide in terms of producing more manufactured homes?
Thank you, Congressman. That's a great question, and there are a couple of benefits. First are the most obvious direct effect of the permanent chassis requirement, which adds several $1,000s to the cost of each manufactured home, which when we're talking about one of the most cost-effective ways of building housing, that's a substantial percentage of each unit. And without that permanent steel chassis requirement, those chassis could be repurposed from home to home, taking off that direct cost of each new unit. And equally as important, I think removing that steel chassis requirement could open up opportunities to use this housing more flexibly. We can find instances of manufactured homes that are attached to a permanent foundation with a basement, and you can see the chassis poking down into the basement. It's ridiculous. So getting rid of that requirement would allow people to use these homes in the way that works for them.
And Dr. Hamilton, from a local zoning perspective, are there any specific rules that make manufactured housing infeasible to build?
Yes, there are a few, and it depends on whether we're talking about manufactured housing in parks or on owner-occupied lots. In the second, on owner-occupied lots, the biggest factor is minimum lot size requirements. When a house is required to sit on a very expensive piece of land, it doesn't make any sense to use a low-cost type of housing that isn't going to end up in an overall affordable product. When we're talking about manufactured housing in parks, we're seeing a nationwide trend of existing parks being redeveloped when land costs change and the highest and best use of the land in that park changes, but localities are choosing not to zone additional land for parks. That reduces the opportunities that are available for using manufactured housing, and it puts residents of parks often in very difficult positions when they can't find a place to site the home that they may own.
Sure. Thank you. Ms. Vasicek, what steps have you taken in Columbus, Nebraska to incentivize the development of manufactured housing that you would recommend for other communities to follow suit?
Sure. Manufactured housing and modular homes as well are allowed in all zones. Specifically on our zoning regulations, we have eliminated minimum lot regulations. We have eliminated lot widths, site area per housing unit. We have eliminated all rules that limit the ability to do accessory dwelling units. So those are a few of the very specific local regulations that are going to get in the way of modular and mobile homes.
And as a result of those changes, have you seen more successful modular or manufactured housing development?
It is definitely increasing in Columbus.
Very good, thank you. As a member of both the Financial Services Committee and the House Agriculture Committee, I have observed the vast difference in execution of how the Department of Housing and Urban Development approaches housing versus the Department of Agriculture. Mr. Compton, what are the negative results of these differing approaches to regulating housing?
Thank you, Congressman. First, for the builders and developers of housing, it simply is different regimes that they have to be familiar with. The way that USDA will go about its financing process is entirely unlike what HUD would do in a similar context. And this may even be where you have adjoining sites, one financed by USDA and one financed by HUD. They will be completely different processes. HUD's tends to be more standardized, whereas USDA, you can either have good experiences or bad experiences, but they're quite random.
The gentleman's
Thank
time
you.
has expired.
Thank you. I see my time has expired, and I yield back, Mr. Chairman.
The gentlewoman from Michigan, Ms. Tlaib, is now recognized for 5 minutes.
Thank you so much, Mr. Chair, for having this important hearing. You know, Ms. Bailey, when you think 50% of HUD employees being illegally fired, many of them illegally fired, I don't think people understand the drastic impact it will have on all the housing crisis that we have. I think the private sector doesn't realize what is going to come down the pipes. I think getting rid of, again, this sort of oversight is also very detrimental. But I looked at the numbers. I said, what does 50% really mean? I saw it goes from 1,529 federal workers in HUD down to 765 people. Even the Office of Public and Indian Housing facilitates, get this, 3.5 million rental assistants. Mr. Chair, that means 3.5 million residents who count on those federal workers for that rental assistance program will be wiped out. And it's going to disrupt services to them and disrupt, again, this effort to try to combat the housing crisis. But when I even look deeper into it, I look at the HUD's Office of Fair Housing and Equal Opportunity, and I was like, okay, so they're going to cut them from, that's 572 workers there, down to 134 workers. That's a 77% reduction. I want you to tell Ms. Bailey, my colleagues and the American people, is housing discrimination still happening?
Thank you for the question. Every year, there are over 4 million instances of housing discrimination. And most instances of housing discrimination are not reported for fear of retaliation. And every year, we have been doing a Fair Housing Trends report, and we see complaints of housing discrimination go up, and we are at record highs, with complaints based on discrimination for disability being the leading and majority of the complaints brought. And I want to highlight one of the victims that the National Fair Housing Alliance recently assisted. She was an older American, and she was facing challenges with creating repairs to her home because, as we all know, insurance costs are rising, and she was unable to pay her insurance, and she was about to lose her home and be foreclosed upon. And what we were able to do as a FIP grantee was to assist her in getting the proper repairs done and make sure there was no fraud and abuse like we saw during the Great Recession, where so many older Americans lost their homes because they were doing things like getting repairs on their home and didn't realize they were signing away a lifetime of equity. And we were able to help her get those repairs and maintain her insurance so that we did not have an older American lose her home. That's the travesty of the Great Depression, the Great Recession of 2008. We saw so many homeowners in cities like Atlanta who were house rich but cash poor be the targets of dangerous and risky, abusive, predatory lenders who would go to their churches, who would go to their community centers as trusted resources and meet with them and convince them to take on projects to improve their property so that they could retire with the dignity that they deserve. They were hoodwinked, and all of their home equity was taken away. And that's why we have the Consumer Financial Protection Bureau today, an organization, an agency with a sole mission of
I always
consumer
tell people it's the
protection.
911 for fraud. That's where my residents call. I call CFPB. I don't care if it's mortgage fraud or targeting them, and they get it over and over again. I can't believe they just got rid of this agency that pushes back against corporate greed and the scams that target I saw them do it to veterans, student loan borrowers, and everyone. But I want to get to a really important question. You know, one of the troubling reports that came out that Elon Musk and Doge, there's so lack of transparency. I don't know why we don't have him at this committee hearing. I have so many questions to ask him on behalf of my residents. But they gained access to thousands of people's sensitive personal information. And Ms. Bailey, you know this, and I want my colleagues to know this. HUD enforces civil rights laws and pushes back against abuse, but it also enforces Fair Housing Act and parts of the Violence Against Women's Act. And often the records in HUD is not anonymous. Like, it's just out there for anybody to have access to that work for the federal government or is basically screened to have access to it. And I'm just, I'm thinking of all those records of domestic violence cases and cases on housing discrimination. Can you talk about the safety and privacy issues for so many of our families that did turn to HUD for help?
They won't have protection. So women who are trying to escape abusers, and including families with children who might be facing abuse, they won't have protection.
Gentlewoman's time has expired. With that, the gentleman from Wisconsin, Mr. Fitzgerald, is recognized for 5 minutes.
Thank you, Chairman. Thank you all for being here today. So in 2023, I have a county, it's part of my 5th congressional district in Wisconsin, Washington County. They established, the county exec, to his credit, established a program to increase the supply of homes that are priced, in general, kind of across the board. You'd say those were middle income. And the goal of the program is to provide quality homes within 30% of the median household income. Under the program, the county provides funding based on maximum of $20,000 per owner-occupied dwelling unit, and it's capped at $2.4 million for any one site. So it's that they're thinking out of the box, and they're trying to come up with a way of building something maybe smaller square footage and smaller lot size, but still fits within the constraints of what would be considered local and state regulations. And this investment is basically a grant to local governments and acts as a 0% loan for infrastructure, construction, and other eligible expenses, and is then returned to the county in the revolving fund. They've had great success already. So, Mr. Hughes, I'm just wondering, I know I'm kind of hitting you with something maybe you're unaware of, but are there other things like this that maybe you're seeing where people are thinking out of the box right now in developing some new footprints that is starting to allow us to build some affordable housing in some of these counties?
Probably the most popular of those that I'm aware of is the increased use of accessory dwelling units, which much smaller. Sometimes it's renovating attic over a garage for a mother-in-law, but yes, this is becoming very common, and more jurisdictions are allowing it. But unfortunately, I would guess that there are more jurisdictions that don't want anything to do with it.
Yeah, my frustration, I think, is that when you look at certain parts of my state, in my district and outside of my district, there's a ton of construction going on, but they're building rental units, right? Or they're building these multiple duplex units, which is, obviously kind of money-making ventures for a lot of those that are involved in the building trades. It's the single-family homes that aren't being built. What we're trying to figure out, I guess, is are these newer units being built, the rental units and the duplexes being built in lieu of single-family housing? Is that something that you're seeing as well, kind of on a national scale?
I'm not sure on a national scale. I can speak to my locale.
Yeah, that'd be helpful.
We have a pretty balanced mix, I think. Of course, we're seeing a lot of growth. I'm from Lexington, North Carolina, and for 100 years, our economy was furniture, textiles, and tobacco, and they all went away in about a 10-year period. And so we've worked very hard to recruit manufacturing, and I like to say that we're a victim of our own success, and we've enticed some very large manufacturers. So we're building a Simmons plant to build locomotives, and we simply don't have enough houses to go around. So we've got a good mix in our area of single family and apartments. So as far as nationally, I apologize, I wouldn't know what the numbers were there.
Yeah, and I think the other issue that's kind of started to emerge is that in the late 90s, there were a lot of subdivisions that were built, and they were large square footage homes, McMansions, right?
Sure.
And there really hasn't been a shift away from that, and yet the prices associated with a lot of those subdivisions are just, they're too high. It's not something it's not a starter home, right? It's not a starter home. So as builders kind of work through that process and come up with a different type of dwelling that maybe fits that, it might help to relieve some of the pressure that's on right now.
Right. I think one trend, you'd be glad to say, I think the average size of a custom home today is smaller. So maybe people are using a little more common sense.
Yeah, I mean, in the 50s, a 2-bedroom, 1-bath home was the standard.
Sure.
And suddenly that became 3 bedrooms, 2 baths, and it continued to grow. So maybe that's an answer. So I'm out of time. Thank you very much. I yield back.
The gentleman from Texas, Ms. Garcia, is now recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you to all the witnesses today, and welcome to our capital and to a big day for many around the complex. I just wanted to kind of talk a little bit about the Trump tariffs. I know that ranking member has already asked some questions of you, Mr. Is it Murray? No, you're Harris, Mr. Harris from the right, and I think both of the press releases that I saw that came from your organization clearly stated your disappointment and displeasure with the Trump tariffs that are coming to both Canada and Mexico and the impact that it would have on some of the lumber that you purchase. But also, of course, combined with that, we know that there are some actions that he is planning on doing in terms of mass deportations, which could gut your workforce by about 30%. Both of those together, it's almost like a double whammy for your industry. Can you all survive?
Yes, I think we can survive, but we are definitely going to, it's going to be challenging, may be the best way to put it. We're very concerned about tariffs. As I mentioned earlier, it's causing me to spend more money already, and it just became official. But we have so many products that come from our northern friends and our southern friends. But Portland cement for ready-mix concrete, I'm in the concrete business, drywall, gypsum for drywall, yes, no question.
Well, but what about the impact of 30% of your workforce maybe not being here anymore?
I haven't felt that in our area. Well, we have a lot of.
But what has your industry felt? Are you getting reports from around the country? Because obviously you represent a national organization.
Sure, we are getting it, and it varies depending on areas. So we're working very hard to increase the workforce. Our association from coast to coast is doing a lot of things to train and retrain the next generation. I've been coordinating carpentry contests for over 25 years to try to train high school kids, which is working very well, but it's a slow fix.
Right,
No
'cause
question, the immigration.
30% is huge in terms of hit to your workforce, and then, what is it, 25% in Trump tariffs? I mean, like I said, it's a double whammy, and I wish you all the best.
Thank you.
I know that many of us are very concerned for a variety of reasons, but thank you for the press releases that you have sent out and made clear about what position you all have. Recently, a constituent reached out to my office to help with casework. She is a mother of 3 and a veteran. She also filed to participate in the HUD Veterans Affairs Supportive Housing Program. The program provides homeless veterans with HUD's Housing Choice Voucher, rental assistance, along with case management and clinical services provided by the Department of Veterans Affairs. She originally filed to participate in the program because she and her children were faced with the risk of homelessness. However, due to the shortage of affordable housing in Houston and the high demand in the program itself, wait lists for HUD VASH program have been closed. They just have been closed. That left my constituent, a 100% disabled veteran who served this nation, unable to participate. Ms. Bailey, your work with the National Fair Housing Alliance directly works with families like my constituent. What can we do as a Congress and as a nation to better prioritize affordable housing so that our vulnerable communities and our nation's heroes can avoid homelessness?
Thank you for the question. One of the things that you can do is make sure the administration is not trying to override the rules of Congress. Dollars have already been appropriated, and those contracts are being taken away. The president does not have the authority to do that. So to hold the administration accountable for making sure dollars that Congress already appropriated are spent in the way that Congress has designed them to do such. The second thing is making sure things like our affirmatively furthering fair housing provision of the Fair Housing Act, which simply requires that every community is vibrant with all of the amenities that everyone needs to thrive, is fully enforced. It is actually the key to some of the local and state-based exclusionary zoning laws.
Thank you. I yield back, Mr. Chairman.
Thank you. The gentleman from South Carolina, Mr. Timmons, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Mr. Compton and Dr. Hamilton, during your testimony, you touched on some things that I want to expand on a little bit. So it seems to me that one of the biggest challenges in the affordable housing space is the complex, I'm going to say patchwork framework of approaches taken by the federal government, the state, and the city. And while they're all well-intended for the same purpose of facilitating affordable housing, they're often contradictory and in many ways vague. And I guess the last part, with elections that have consequences, some of the state and local rules can change in the middle of a development, and the permitting process can be overly onerous and complex. So, Dr. Hamilton, is there a way that the federal government could preempt all of these rules to create an NFIP, National Flood Insurance Plan, style system through which state and local governments can then adopt portions of it to try to streamline that? Does that question make sense?
Thank you, Congressman. Part of that is outside of my area of expertise as far as the legal role that Congress could play in a more aggressive role in determining zoning and permitting processes. But I think there are absolutely lessons that need to be shared from states and local governments and implemented in terms of what's working. One thing we often see is that the repeal of one specific zoning rule intended to make a new type of project feasible to build will just reveal the challenges in permitting or building codes or subdivision regulations that are still standing in the way of the type of housing that the reformers were hoping to see.
Mr. Compton, what are your thoughts on that concept?
Yes, Congressman, in my opening remarks, I spoke of a systemic or systematic approach to this, and I think that one of the problems that we have really dates back to the 1986 Tax Act. We took out passive loss, we put in passive loss limitations in the 86 Tax Act, which essentially took individuals and small businesses out of the ability to invest economically in real estate. And I think that that had the unintended consequence of disconnecting local investors from the local real estate market. And what we've seen over the last 40 years since that was done is an explosion of local regulation, and in part, it's because many of the builders are the national builders, which don't have input into state and local elections, and thus there's really no political check on the growth of these regulations because many, many homeowners would just as soon nobody else ever build near them. And I think that re-examining the, as part of the Tax Cut and Jobs Act reconsideration, looking at taking passive loss limitations off of residential investment could help restore balance.
Thank you for that. It seems that all levels of government are searching for a solution to the problem of affordability. In my district, it's particularly challenging as we have gentrification due to increased population growth, and we have no public transportation to speak of. So, it's even more of a challenge there. I've encouraged our state and local government to view this challenge from a perspective of how do you incentivize as opposed to require, because my experience when local governments try to require a percentage of affordable housing, it really creates a bad environment, because if you're telling a developer they have to do 25, 30% affordable, that developer is still going to get the rents necessary to make the project work, and you're going to have the 70% of the people subsidizing 30% and neighbors subsidizing neighbors. I actually think is just immoral. And if we're going to do this, we should consider it from the perspective of general fund tax dollars. And if you want to then use those general fund tax dollars because you've convinced the people that you represent that that's an appropriate use of tax dollars, which I think many cities and states can have that conversation, then you incentivize developers using general fund tax dollars. It just makes a lot more sense. And it's harder to do. It's a lot harder to do because you actually have to defend your policy decision to the people that elect you. But it is drastically superior to telling developers that they must force one neighbor to subsidize another. And yeah, I appreciate this hearing. I look forward to work with my colleagues across the aisle to try to solve this problem for all of our cities and counties. Thanks.
Gentleman yields back. The gentleman from California, Mr. Liccardo, is now recognized for 5 minutes.
Thank you, Mr. Chair. Thank you for allowing me to wave in, and thank you also for taking the time last week. I appreciated the opportunity, or 2 weeks ago, I think, to speak with Democrats about our ideas on housing, and I really want to thank Ranking Member Cleaver for the invitation to that conversation. Mr. Hughes, I appreciate your emphasis on the 5 L's. Thanks for keeping it simple for us. It's helpful. I want to talk about 3 of those L's for just a moment. First, on the lending, I really appreciate NAHB's advocacy for full funding for all HUD and USDA rental assistance contracts, for robust funding for the home program, for the USDA home ownership direct loan programs and multifamily programs. I think those are all important, and I certainly hope my colleagues on both sides of the aisle will heed your advocacy. In particular, I was interested about the expansion of the low-income housing tax credit. I know that there was pending legislation in the last session, and specifically on boosting the 9%, which I imagine could help a lot of small jurisdictions, smaller towns that don't have a lot of access to capital that still have a gap in the capital stack, by boosting it, say, from 9 to 12%, could enable projects to actually get a shovel out of the ground much faster. Have you seen that happen based on the experiment that we just went through the post-pandemic era when we saw a boost in that tax credit?
Well, personally, I haven't had any dealings with LIHTC at all, but I've got some friends that have, and they love it, to be honest with you. It's one of the best tools they have. So I'm sorry I can't speak directly to it, but I know they would like to see it increased. And we know we don't stand a chance furnishing housing for low-income families without some kind of government subsidies, and that's one of the best.
Yeah, I agree, and I think certainly my experience as a mayor of a large city where in a very expensive place, we had a capital stack sometimes of 7 or 8 different sources. Having that boost could be a real catalyst to getting more units built. Going to the next L, labor, I think you testified, was it 300,000 open positions?
Correct.
In
That's
construction
average.
across the country?
Average, right.
And is it fair to say that's been something of a chronic challenge for us since the Great Recession for about a decade and a half? Is that right?
Sure, exactly, because the recession retired a lot of people before they wanted to, or before they would have naturally, and it left a huge gap.
And we can agree that having more immigration would probably help for those skilled labor positions. Is that fair?
Absolutely, and I grew up in the tobacco belt where we used immigrant help, but the outfall of that a lot of times was the folks that came in for seasonal work. We don't have tobacco anymore, but we've got Christmas trees, so we still have a big influx. And a lot of these workers get a job and stick around and learn to lay block. And that's, I mentioned we're working very hard to train the next generation, but it's slow.
Yeah.
There's got to be some ways that we can take advantage of the immigrant force that we have right now.
And the many people who do want to work.
Oh, absolutely.
Yeah.
No question.
I
They
appreciate
just want
that.
to work.
And I also appreciate your prior testimony that we were not helped any with regard to housing construction costs by the president's increase in tariffs. We know it affects Canadian lumber and many other building materials, and I appreciate your testimony in that regard. Dr. Hamilton, I appreciated your testimony as well, and I understand particularly the points around zoning and how that can be a real constraint. We do have, we know, a challenge in many local jurisdictions where folks, some may call them NIMBYs, neighbors who yell because they love their community, of course, but they don't like something getting built that's tall next to their neighborhood. We have existing stock of buildings with 20% vacancy right now, nearly 20% nationally, and that is our office stock. And there's an opportunity certainly to rehabilitate those buildings. Wouldn't it make sense from a zoning perspective where perhaps we could have a federal program that could stimulate the conversion of those buildings with perhaps a by right rezoning requirement?
Thank you, Congressman. Yes, there are certainly instances where office buildings can be successfully converted to residential to great effect. Sometimes with historic buildings, it creates beautiful opportunities for very cool multifamily projects in what are no longer viable office buildings. Unfortunately, there are many more instances where the floor plate doesn't work.
Gentlewoman's time.
Understood. It only works with smaller floor plates, but it's still a significant percentage.
Gentleman's time has expired. I recognize Ms. Garcia for unanimous consent request.
Mr. Chairman, I ask for unanimous consent to introduce into the record two press releases from the National Association of Homebuilders. One dated February 1st, 25% tariff hike on Canadian and Mexican goods, harming housing affordability. The second one, Trump imposes additional 25% tariff on Canadian softwood lumber. The third article is from the Houston Chronicle, and it is Texas wants more affordable housing. Insurance costs are getting in the way. Thank you, Mr. Chairman. I yield back.
Without objection, the gentleman from New York, Mr. Garbarino, is now recognized for 5 minutes.
Thank you, Chairman. Thank you, all the witnesses, for being here today. On an average, government regulations account for nearly 25% of the cost to build a typical new single-family home, totaling almost $94,000. Mr. Hughes, NAHB research has found that approximately 14 million American households are priced out of the market for a new home by government regulations. Can you give us examples of regulations either during the development or construction phase that have led to these increased costs for housing?
I can give you many. My favorite.
Only got 5 minutes.
I know. And my target is on energy codes. We debate a lot about codes, and truthfully, 85% of those we don't have an argument with, as long as it's health and safety. Where we get a little sideways is when we get involved, the federal government gets involved with energy codes, increased energy codes, and that's where it has really escalated out of control. So we would love to see that, and one of those requirements is on the HUD, USDA and VA loans having to conform to those heavier codes.
Absolutely, and it's not just the federal government, but, we've seen states do it. This past Friday, New York moved one step closer to installing a gas stove ban for new buildings. First in the nation, ban will increase energy costs for New Yorkers and stress the electrical grid and eliminate consumer choice, all while having a minimal environmental impact and pricing out working class families. Mr. Hughes, you just mentioned these standards that are coming out and being forced on HUD and the USDA and New York energy standards. We see these things coming out of here. They don't have the benefit of what the intention is, but they're having a lot of negative impact. I talked about cost. What about timing of projects, viability of projects? Are these stopping even things from getting started?
Sure, if not stopping them, tremendously slowing them down.
I appreciate that very much. The main factor, I'm going to switch things here. The main factor contributing to housing unaffordability is the ongoing shortage of homes required to meet increasing demand. In order to right the ship, we must explore innovative solutions to keep pace with household needs. One such solution to address not only affordability issues, but also the supply challenges, has been manufactured housing. Dr. Hamilton, could you please describe how manufactured housing could possibly address the high cost of building new construction in high-density urban areas such as Long Island?
Thank you, Congressman. Yes, manufactured housing presents cost efficiencies over site-built housing in a variety of ways, one of which is that it can be built off-site, where labor costs can be much lower than they are on Long Island. What's necessary, though, in high-cost places is typically allowing a dense manufactured housing development that local zoning rules are generally standing in the way of. One factor could be outright manufactured housing bans. Another could be minimum lot size requirements, which make the cost of each piece of land that a house can sit on very expensive and make manufactured housing an unviable solution. Although some of HUD's recent reforms to allow for more than one manufactured housing unit to be combined are promising.
Thank you very much for that answer. And I want to make a statement just to finish. We have heard a lot of complaints about the cost of homes going up, the cost of construction, the cost of buying, and very little has been done to solve it, except for the past administration and a lot of state governments controlled by, New York, for instance, controlled by Democratic governor for the last 20 some odd years. They've gone after the mortgage industry, they've gone after the title insurance industry, they've gone after the realtors, they've gone after the home builders, all to try to, all these groups that help people actually achieve home ownership. They've gone after them as if they're the problem. They are not the problem. Overregulation by government is the problem. They need to get out of the way and let these people who have done a great job for decades of letting people buy homes, get them back into the business where they've been and been so successful at it. So we've got to get out of the overregulation that government has done. So with that, Mr. Chairman, I yield back.
Gentleman yields back. The gentleman from New York, Mr. Torres, is recognized for 5 minutes.
Thank you, Mr. Chair. Even though housing is one of the central concerns of every American household, funding for HUD represents a mere 1% of the overall federal budget. The FY 2024 federal budget was in the range of $7 trillion, of which only $70 billion went to HUD. Ms. Bailey, do you think housing is getting anything approaching its fair share of federal funding?
No, and thank you for the question, sir.
And the National Low-Income Housing Coalition reports that America has a housing deficit of 7.3 million units for the lowest income Americans. The United States builds somewhere between 1 million and 2 million units a year, but only a small subset of those units are affordable to the lowest income Americans. Now, I'm all for land use reform, for reasonable deregulation, but the fact is that it's all but impossible to build deeply affordable housing for the lowest income Americans without some measure of public subsidy. Is that correct?
Correct.
And so if we continue to catastrophically underbuild housing in America and continue to catastrophically underinvest in housing in America, then we as a country have no hope for closing the housing deficit of 7.3 million units. In fact, that deficit will only widen over time. Now, the greatest sources of deeply affordable housing are Section 8 and Section 9 public housing. There are about 5 million Americans living in Section 8 public housing and about 2.5 million living in Section 9 housing. I can tell you as a product of public housing, most Americans who live in Section 8 and public housing would be homeless without it because market rate rent is simply too high. And so my question to you, Ms. Bailey, is what is more expensive for the federal government, homelessness or those housing programs?
Homelessness, sir. Thank you.
And so when the federal government defunds or underinvests in programs like Section 8 and public housing, it is not creating a cost savings. It is simply substituting the higher cost of homelessness for the lower cost of affordable housing. Do you agree with that assessment?
Yes, sir.
So affordable housing is not a cost, but a cost savings relative to the far greater cost of homelessness.
I would add fair and affordable, sir.
And the federal government must not only create new housing supply, we must preserve the existing housing supply, and nowhere is the need for preservation more pressing than in public housing. I grew up in New York City public housing, NYCHA, which has been so chronically underfunded for so long by the federal government that it has a capital need of $80 billion and counting. That's 80 billion with a B. And housing authorities like NYCHA typically receive only a percentage, only a proration of the formula federal funding for which it is statutorily eligible. In fact, there have been years when NYCHA has only received 82% of its formula federal funding. Do you think there's a private landlord in America that could operate with only 82% of the revenues that it needs?
No, sir.
So why should we expect that of public housing?
We absolutely should not. And in fact, we need more investment, and we need to be very intentional. The Housing Crisis Response Act has $150 billion. It's a sensible package that we all need. We need to see increased support for housing choice vouchers, increased support for public housing authorities, and we need to act quickly. Housing is an important pillar of our economy. If we allow housing to fail, the economy fails.
And federal public housing is a federal program and a federal obligation.
Yes.
So if there are bricks falling off of public housing buildings, does the federal government have an obligation to replace them?
Yes.
And if there are leaking roofs that are causing water to penetrate and damage the building systems, does the federal government have an obligation to replace those roofs?
Yes, because the people who live in those housing places, they deserve the dignity of a home that's safe.
Safe, decent, affordable housing, which every member of Congress enjoys. So why not wish for every American the safe, decent, affordable housing that we as members of Congress take for granted? I have a question for each of the panelists. There are multiple causes to the affordability crisis, right? Insurance, construction costs, land use. Which cause would you identify as the most consequential? And I'll start with Mr. Compton.
Hearkening back, Congressman, to what I said about what we did in the tax code 40 years ago, we intentionally knew that changes in the tax code in the 1986 Tax Reform Act were going to cause underinvestment in housing, and that's exactly what we've gotten.
Thank you, Congressman. I'd point to land use regulations and permit approval processes.
Excessive codes.
I would say since we have reformed our local regulations and we have invested significantly in housing at our level, it is some of the federal and
Gentleman's
state
time is expired.
requirements.
Gentleman's time is
Thank you. I have a shortage of housing and a shortage of time, so thank you.
Thank you. The gentleman from New York, Mr. Lawler, is now recognized for 5 minutes.
Thank you, Mr. Chairman. I don't think there's any question housing is one of the most important issues facing our country. We are approaching 7 million units underbuilt nationwide, and it impacts every community across the country in every type of housing stock. One of the most common refrains that I hear when discussing housing with residents across my district is their concern about the affordability of housing. It remains the most persistent challenge. With mortgage rates near their highest since the turn of the millennium, a limited housing supply in many communities, and ongoing supply chain and construction issues, it is perhaps the most difficult time to purchase a home in our region's history. This affordability crisis is further complicated by the fact that many homeowners remain unable or unwilling to sell their homes for fear of losing their fixed low-rate mortgages obtained prior to 2022. The median cost to purchase a home is more than 5.6 times greater than the median household income nationwide. And looking at the growing crisis in my district, in Rockland and Westchester counties, which pay among the highest property taxes in America, according to the National Association of Realtors, the monthly average cost of a mortgage was $1,000 more in 2023 than it was in 2022, and in Putnam and Dutchess counties, it was at least $800 more per month. That's anywhere ranging from $10,000 to $12,000 more per year on an annual basis. For many families, this is totally unsustainable. And it's why I will be reintroducing, and I'm glad to see notice with today's hearing, my Housing for America's Middle Class Act. This bill will improve our understanding of the efficacy of federal housing affordability programs and of any gaps that exclude middle-income households. Mr. Hughes, given the estimated cost of construction continuing to climb, can you highlight why most builders opt to produce more expensive housing to remain economically viable?
I think most builders just address their market, what market they're going to be able to sell the homes. I deal primarily in western North Carolina, where there's no starter housing. Everything's large custom homes. It's a great market. You can only build 1 or 2 a year, but it's a good market. Everybody seems to have their expertise, I guess. Spec building is not mine. I'm more of a custom builder.
Mr. Compton or Mr. Hughes, what in your view needs to change either at the regulatory or market level to ensure that the construction industry can produce homes at a price point for middle-income consumers?
Congressman, thank you. I think that what is vastly underestimated in terms of the regulatory burden is not just the cost or even the time that it imposes, but it really is the multiplicative effect that the time has on risk. And given that profit margins, whether it's an expensive house or a less expensive house or similar, is that the margin for error on less expensive houses, if you have an unexpected 3-month delay due to some regulatory issue, can take that from being profitable to a loss. And so there is simply much greater risk, both perceived and real, for lower cost houses because of less of a margin of error. And so I think making the regulatory process not only less but more predictable would be helpful in that respect.
It's estimated that the construction industry needs over 400,000 workers next year to meet growing demand. In your estimation, how can these goals be met? Direct this to Mr. Hughes.
As I mentioned before, immigration, we simply have to have a short fix. We're doing all we can for the slow, long fix, but there's got to be a way to figure this out. We've been doing it for decades, and we've got to get a handle on that.
I don't think there's any question as we deal with the economic challenges facing the country, three of the biggest issues that I see is immigration, energy, and housing. And if we actually address all three in a serious and substantive way, and address the workforce shortages, address the energy supply, and address the housing supply, our economy will be in a much stronger position, and the cost of housing will come down.
Gentleman's time has expired. Gentleman yields back. The gentlewoman from Oregon, Ms. Bynum, is now recognized for 5 minutes.
Thank you, Mr. Chair, and thank you to the witnesses. My state of Oregon has faced some of the fastest growing housing costs in the country, and I'm concerned that despite state-led efforts like rent stabilization and zoning reform, many families are still priced out. So, Ms. Bailey, what additional fair housing policies or federal support do you think states like ours, like mine, would make housing more accessible, particularly for low-income and marginalized communities? And if I could put a finer point on it, this morning we talked a little bit about what it takes to give some hope to the younger generation. I have a 23-year-old and a 20-year-old, and when I talked with the realtors a couple of weeks ago, they told me 38 was the average age of a first-time home buyer. So I'm telling kids now, if let's say you graduate from college or trade school, you're 23, you have to work 15 years to be able to get into your own home? Help me make it make sense, please.
Thank you so much for the question. The Affirmatively Furthering Fair Housing Act provision of the Fair Housing Act is critical to being a tool for local jurisdictions to actually attack and dismantle the structural inequities that have been created by exclusionary zoning laws. So fully enforcing the Affirmatively Furthering Fair Housing provision, which says that every dollar for housing and community development programs expended, they must make sure all communities are vibrant and inclusive and that the people there can thrive. And that's for HUD, Treasury, Department of Education, Department of Transportation, and every federal agency. The second thing, in response to your question, we need to pass the Housing Crisis Response Act. It includes critical funding for first-generation down payment assistance. This is down payment assistance that would help home buyers whose prior generations have been locked out of the system because of exclusionary policies that have made it impossible for them to build intergenerational wealth that they could pass forward to new generations and help them enter into home ownership. The number one barrier for people who are interested in becoming home buyers and who are being beaten by investors is a lack of a down payment. So first-generation down payment assistance would help people in urban, suburban, and rural communities get access to the down payment assistance that they need to enter into and successfully become homeowners.
Thank you. I would also push to say that even middle-class kids who grew up in a home, they're having troubles too. I would venture to say a lot of the young kids working in the Capitol today could hardly afford to buy a home, even with very good salaries. Did anyone else on the panel want to poke at it? Do you have kids that you want to get out of your house that you'd like to be able to help them buy a home?
Well, I will comment. I've got 3 grandsons under
Okay.
10 years old, and I'm very concerned
Yeah.
that when they get of age, they're going to be able to own their own home, even if I'm still around to build it for them.
Mr. Chair, let the record reflect that we are all concerned about the fate of our young people in this country and their ability to buy their own home and stabilize their living arrangements for the future. Ms. Bailey, you also mentioned a little bit about institutional investors, or at least I heard a little bit about that. And I'm really concerned that they own now a significant share of rental housing and fairly or unfairly have been accused of driving up rents and so and perhaps limiting supply in some area. We know that this form of funding is filling a gap, but how can we make that more friendly to the people in those communities who want to buy homes? How can we adjust what's happening in that market fairly?
Again, providing first-generation down payment assistance and using our fair housing laws to actually enforce them against harmful practices. We've heard allegations that some companies are using technologies, for instance, because technology is playing a broader role in making housing decisions, and technology is driving up the cost of housing in different communities. So using things like the Fair Housing Act and the Equal Opportunity Act to fully enforce those important civil rights protections.
Thank you. And Mr. Hughes, I think I can see that. Oregon's a national leader in mass timber production, and so our state has promoted cross-laminated timber as a more sustainable, cost-effective building material. Any interest in your neck of the woods for cross-laminated timber?
I've seen it, I've researched it some, but no, I haven't seen it used at all, except maybe in a couple multifamily, large multifamily projects. Unfortunately, I've seen a couple failures too.
Okay, thank you. Thank you, Mr. Chair.
Gentlewoman yields back. The gentleman from the great state of Montana is recognized. Mr. Downing, you're recognized for 5 minutes.
Thank you, Mr. Chair, and thank you to the witnesses for being here today. I think about, my idea of the American dream, being able to buy your first home and worry about things that get that farther and farther, harder and harder to do. And I'm just looking at some numbers from Montana, and we've seen, the 5-year period from 2018 to 2023, we saw about a 90% increase in the median home value in listings. In that same period, we saw median household income in Montana increase just under 30%. So it's almost 3 times more in that period. The median listing price for a home in Livingston is about $640,000. And one of the things that I thought was interesting, another data point I saw, is shows that for every $1,000 increase in the cost of building a home, that you're foreclosing on about 106,000 potential buyers in that, and so limiting the market to those folks. And one final thing that I think is germane to this conversation is about 77% of U.S. households are already not able to afford a median-priced home, and that about 24% of that is from regulations across all levels of government, and that's according to the National Association of Homebuilders. So I'm going to start with Mr. Hughes. Under the previous administration, Joe Biden saw affordable and reliable energy as the problem in favor of the Green New Deal priorities. In 2024, the Department of Housing and Urban Development, in concert with the Department of Agriculture, promulgated a final rule requiring all HUD and USDA financed properties to adhere to international green energy standards. So how do these sorts of unrealistic energy standards put affordable housing out of reach for many families?
It's added so much extra cost and it doesn't pay for itself. Simply now, I've been using innovative, energy efficient products for over 20 years, and I'm a big believer in them as long as they pay for themselves. You simply can't pay for these increases.
Right. Mr. Compton, anything you would want to add to that?
We certainly have seen this growth, whether it is in the energy space or in others. I think one thing that's also underappreciated is just the cumulative burden of all of these things. I have likened it to the old tale Gulliver's Travels, is that any one of these strings is not enough to kind of hold the housing market back. But by the time you've piled, several hundred or several thousand on someone, that the cumulative burden is just enormous. And so things that if viewed in isolation, we would say, well, that's really not such a bad idea. That'd kind of be okay. Is that when you take, 500 of those, well, that wouldn't be so bad. Is that we have really ended up at the place that you're talking about, which is this 24% of cost. And then, as I mentioned earlier, I think that kind of an untabulated cost is the risk that adds due to the delay that's inherent in it.
Right. So continuing on this, another example of the burdensome impact of environmental regulations is the broad application of the National Environmental Protection Act, or NEPA. NEPA was originally intended for large-scale industrial projects, like power plants, with significant environmental impacts. And today, it is expanded to include housing construction, which creates costly delays on projects. So, To you, Mr. Compton, how should NEPA be reformed to make housing construction faster, more affordable, and still maintain, sensible environmental protections?
Thank you, Congressman. I think in particular, first is to recognize that NEPA is not a substantive environmental regulation. It is instead simply process. It doesn't say what you have to do. It simply says how you have to do it. And it imposes an enormous burden in terms of time on many projects that are subject to it. And it is even broader than what you mentioned. I mean, for instance, a project that has project-based vouchers from HUD is now subject to NEPA. This is far beyond, I think, what was originally intended, as you mentioned, for nuclear plants, hydroelectric dams, and Air Force bases. And I think that what the Congress did in 2023 in the Fiscal Responsibility Act really lays the groundwork for meaningful change in the regulations. Courts have held that the existing CEQ regs are unconstitutional. This is the time to really take a new look at this, and I think that great progress can be made in this area.
Well, thank you very much. Unfortunately, I've run out of time, so Mr. Chair, I yield.
Gentlemen yields. I'd like to thank all of our witnesses for your testimony today. Without objection, all members will have 5 legislative days to submit additional written questions for the witnesses to the chair. The questions will be forwarded to the witnesses for their responses. Witnesses, please respond no later than April 30, 2025. This hearing is adjourned.